So let's start. My first question is, can you tell us a little bit about your background?
Yeah, so I guess software engineer by trade. Yeah, that's what I do mostly in my day to day. And then, yeah, in the evenings, I take a passion in researching stocks and doing all that kind of stuff. Right now, I've been following Abaxx and MineHUB mostly, but
Mm-hmm.
yeah, just taking an interest in those kinds of things.
Mm-hmm. And why are you focused on these two names specifically?
Tunes. So Abaxx that started back in 2020. I was listening to, I forget his name. It was on a podcast. It was like the first podcast that Josh did. Robert Townsend, I think. Yeah, McAvoy's podcast for Abaxx.
Mm-hmm.
And they're pitching the whole thesis of Abaxx, which would be instantaneous delivery, bearer bonds would be digitized. You'd have commodity tracking, you'd have graded commodities, which was one of the big things I was excited about, where you have, instead of just, copper, like there's the globalization of the entire economy. So you have one price of copper is usually the price for the whole global. I mean, you'll have some regional price differences, but usually you have one copper price. And then all the companies around the world are competing for that copper price, right? And then the idea of graded commodities, I've always thought it was a little wild to me that, a company in Canada would have to mine, let's say, cobalt, using proper labor practices, you're paying health and benefits, safety protections to the workers, and they're getting the same price of cobalt as a company who, let's say, in Africa, who doesn't really respect the workers. And then, so I think there's an unfairness there. And then I think that if you start introducing graded commodities and you start pricing those things, then you bring up the price. Well, you bring up the price at the same time. You also make ensuring that there's an incentive for companies to offer their workers better rights, better protections, better emissions, like investing in reducing emissions, stuff like that. And I always thought that was a great way to tackle the problem there. And then, so I was following Abaxx for years, continually buying over and over and over, even down to the lows of when it dropped like 50%. But yeah, I kept buying throughout that time. And then they did a partnership with MineHUB. And then I looked into MineHUB. Abaxx bought 20% of MineHUB. And then I looked into MineHUB, and then I realized that's their way that they're planning on tackling the graded commodities and supply chains. Then I did more research into MineHUB, and then I liked what I saw, and then I started buying into MineHUB.
So let me understand this. When did you exactly start your position in MineHUB? Is it a big position of yours?
It's a massive position of mine. I started my first initial buying was shortly after they announced. I think that's when I started doing my first purchase, which was around 33 cents, I think. I thought, if Abaxx is willing to pay 35 cents, I might as well get it for 33 cents. And then it started to go down a little. It started to go down actually to around 24 cents. And I kept buying all the way down. And then I kept as soon as I had more money to invest, then I just bought more. And then, that kind of just kept growing. And now I have a fairly large position in that.
So if MineHUB and Abaxx succeed, it can be a life-changing investment, right?
Yeah, definitely. Yeah, I would say that, yeah. Yeah, I mean, when you invest, that's the thing with these micro caps. They're very low priced, right? There's tons of companies that are worth $1 billion, but MineHUB's I think $40 million now.
Mm-hmm.
And if they are successful in what they're trying to accomplish, then maybe it's $1 billion company, maybe more. Abaxx is definitely they're trying to be very competitive with the likes of ICE and CME, and those are $80 billion companies, and Abaxx is 400 million right now.
Mm-hmm.
So the potential is significant there, but of course then there's the risk too. There you have a higher risk.
And what gave you enough conviction to buy shares in both companies, but specifically MineHUB shares? Was there a specific moment or event?
There wasn't for Abaxx. That was when I first heard about it. I bought it as soon as I could, I guess. So that was also shortly after I listened to the podcast. Then throughout the time, I kind of paid attention, but not really, because it was also in this, the developing stage. There wasn't much info. Then more and more info came out of what they're doing, and then I started to take a more focused look on it. Started buying more and more. There wasn't necessarily an event. It's just this build up over time of like, okay, you start to see the dots being connected. With MineHub, I don't think there was anything also specific about that. I think my Abaxx, because I was following Abaxx for quite some time, so I always believed that Abaxx with their connections and now their ownership of MineHub was really going to push really MineHub, right? Because MineHub, it seems like Abaxx is positioning MineHub to be the key to their graded commodities. And so if that's the case, and if you assume that Abaxx is going to have strong success in the graded commodities sector, then every single company that is using Abaxx, right, and all the connections, that also would have to come to MineHub. And so that alone would give it a significant growth. That wouldn't otherwise be there if it wasn't for Abaxx. I mean, MineHub also is growing a lot, but Abaxx is also kind of like really lighting the fire beneath, starting the fire there too as well.
Okay, great. And what potential do you see in MineHub? How big do you think it can become? And I also ask this about Abaxx.
Okay, so for Abaxx, they're trying to compete with the likes of ICE, CME. That is that's like 100x from here, right? If they can, 100x from here is only like a $30 billion market cap. What they're doing with gold is like, it's crazy, because with the gold, they're going to have instantaneous settlement. And when you have instantaneous settlement, you start to reduce the frictions throughout all the banking system, which, that alone is going to be significant, right?
Mm-hmm.
That and it locks on a lot of potential. For example, you also have LNG. LNG alone could be worth a couple $1 billion, that contract alone. So if they're able to get benchmark standard, which they are already, I think they're pretty much there. Even though the volume isn't that high, I think that the amount of companies that they're onboarding to trade the LNG will start to get benchmark status. That alone is worth a couple billion. So just on like LNG alone, you're looking at 10x. With gold, that is a lot more. The sky's the limit, because just imagine the world's entire gold economy trading through Abaxx. That's going to be significant. Probably also another 10x there. So if you add in them together, it's like a 20x.
Can you explain Abaxx thesis a little? Because I know MineHub's thesis quite well, but I don't know Abaxx thesis so well. I mean, why are the things that they are doing important? Why is their gold contract important and their LNG contract important? Can you tell me a little about that?
Yeah, sure. So for starters, when you have these commodity contracts, you have physical deliverable and financially settled contracts. So that's a huge difference. For starters, financially settled contracts, very easy to deploy. It just could take like a day for ICM, CME to launch one. Very easy. The downside though is let's say you're buying your LNG electricity, or your electricity provider that uses LNG to run your electricity plants, right? You go on the contract and you say, I need this much LNG to provide this much electricity to my customers. You need that physically settled. You need that LNG. Like, there's no way you cannot have that LNG, right?
Mm-hmm.
It's a financially settled contract. When it comes to delivery date, you're just getting the money value for the LNG that you just bought, which is a completely different scenario compared to the physically delivered contract, right?
Mm-hmm.
Effectively, you're short LNG because you have to provide the LNG. You need the LNG because you have to provide the electricity to your customers. If the price of financial LNG is, I don't know, $100 per BTU, I don't know if those numbers are right. But then you could also have the physically delivered LNG at 150 BTUs, price per BTU or something like that. That's a huge difference. You may have bought the financially settled contract to hedge your risk, but really the risk you can't really hedge your risk with financially settled contracts as well, because it takes into the fact that you actually need physical delivery. Looking back at one example was the crude oil Brent contract, I think it was. That's physically delivered. What happened when COVID hit? People literally couldn't get rid of their oil fast enough. The price went negative because they were paying people to take the crude oil, right? So that's what happens in a physically settled contract. People weren't understanding that risk, and I guess you can't really account for COVID, but in a financially settled contract, you just get the value worth, right? And as of now, there's no physically delivered trading contracts for LNG, except for Abaxx, who just started it. So you have the push from Abaxx to deliver only physically delivered contracts. So if you buy LNG on Abaxx, you're also getting the LNG. The same thing with the gold futures contract, which they just launched. Same thing with the carbon credits contract that they launched, as well as their, I think it was nickel. I think they launched nickel and lithium. I forget. I think it's nickel. I think they might be working on lithium.
Do you already have contracts in the world, like gold contracts, that are physically delivered in the world, or Abaxx is the first company to offer that?
Okay, that's a great question. There are physically delivered gold contracts, but the downside with that is you have a physically delivered futures contract, I think, in New York, and you have a physically delivered spot contract in London, England. So what happens is there's a hedge there that can be made. For one, the contracts are in different financial jurisdictions. So you have different risk tolerances that you can have as a company. So you have to manage the risk tolerances between the gold contract in New York and the gold contract in London, because you also have to account for delivery. So if you have to deliver the gold in New York, then you have to buy from spot in London, and then you have to ship it across the ocean because the delivery point for the New York is in New York gold contract is of course in New York, and the delivery point for the spot market is in London. So when you combine, for what Abaxx is doing, though, they're combining the two contracts, the spot and the futures contract, into the same jurisdiction, and then they're attaching a warehouse directly to it. So the futures market delivers directly to a warehouse in which the spot market is connected to. So now you don't have the mismatch. And I think there's also a mismatch in the sizing of the gold contracts that exist now. I don't know exactly, but like the New York might be 1,000 ounce bar, and I think London has a different standard. Maybe there's one of the contracts that have a different standard. So then you have to send it to a refinery, you have to smelt it, change the version, so then you can sell on the next market. Whereas for Abaxx, it's in the same jurisdiction. You have a warehouse connecting the two, and it's in the 1,000 the 1 kilo form, which is apparently more used. It's more standardized in the Asia markets. So really, you're combining all of those together. So you're reducing like the friction to trade between the two. And then when you do that, then Abaxx is also introducing the ID++, which is basically allowing them to do instant settlement using your gold as your settlement layer. So then you have the idea of you can buy in the futures market, deliver into the spot market, and then you hold gold physically in your warehouse, and then you can use that as your backing for other LNG trades, for example, and then use that as collateral. So it travels. Everything starts to travel much quicker. With the Abaxx ecosystem.
Wow, you studied a lot in this market.
Yeah.
And how does MineHUB fit there in Abaxx operation?
Yeah, so for MineHUB starts to come into the role with graded commodities. As more and more governments are starting to introduce restrictions on or limitations on what you can import into the certain countries. For example, Canada is bringing the forced labor restrictions, which means that you cannot bring products into Canada if there was proof. We have to prove that your product was made using forced labor. That's one example. Europe, you have the CBAM, which is basically the carbon market adjustment mechanism, which is Europe has its own carbon tax, and they don't want companies without a carbon tax to start importing all this cheap goods that didn't properly price carbon. So what they do is they automatically add the carbon price on all the goods being imported. So you have to trace. So in order to do that, you have to trace the commodity used in your product through the supply chain in order to align with those restrictions. So then we're going back to the globalization that I mentioned before. If you bought copper on an exchange, and you might not know exactly where it came from. I mean, for example, LME uses a warehouse model. The copper or whatever they're trading, nickel, gets delivered into the warehouse, and then it becomes like a black box, right? You don't know, and then you go and you get the copper. You don't know actually what was involved in producing that copper. It's kind of a black box, right? And that black box also made it so you have more chance of fraud. I think, for example, the London, the LME had a nickel fraud where they started opening bags of nickel, I think it was, and it was literally just like piles of rocks. It wasn't actually nickel. And that was in turn because people delivered the nickel in bags to the warehouse, and then a customer sometime later picked it up and it was just a pile of rocks. With Abaxx and MineHub, the idea is that you have delivery points where you can accept the delivery from the buyer and the seller. You don't necessarily have that warehousing model. So then the buyer or the seller using MineHub can tell the buyer, this is where my copper was sourced from, this is where my nickel was sourced from. I give it to you, and then that buyer is also using MineHub. They take that delivery, and then they're getting all the information required from the seller automatically. And then they use that information and they import it into Europe to align with so then they can tell Europe, this copper is actually produced in USA or Canada, I think, or some other country, and this is how we align with the requirements. And then what Abaxx is working on, I think, like they haven't really confirmed it yet, but they're working on allowing, because they have the carbon markets as well, the physically delivered carbon markets. If you know your copper doesn't have enough carbon offsets before you import into Europe, then when you buy on the exchange the copper, you can also automatically add the carbon offset by also buying carbon. With that trade, you can pair the trades together. And then when you take the physical delivery of the copper from the seller, you can merge like the two datas, I guess, right? Through using MineHub, you can say, this copper had no carbon offsets, but I paired it with this carbon offset from the Abaxx exchange, which was physically delivered to me. So I combined them and I'm now importing into Europe. So you reduce a lot of friction there.
And how big can this partnership be? What can this partnership represent for MineHub?
For MineHub, it would be the integration of like all of Abaxx customers, right? So every time a buyer or a seller wants to use Abaxx, then Abaxx can be like, hey, we also sell graded copper. If you want, let's say, a small premium on your copper, then you can integrate MineHub, and then you can import all your data into MineHub. Then we can track it, trace it, and then we can offer the ability for you to sell your copper at a slightly higher premium. It goes into what I was talking about with cobalt. A Canadian mining with cobalt would be like, hey, a great example would be the copper mine. Robert Friedland, he has a Kamokamula copper mine. That's one of the cleanest copper mines in the world, because I think it has to do with the density of copper is just so high that the amount that it's much easier to mine. They would obviously want a premium on the copper because there's much less carbon emissions, right? It's a cleaner, greener copper compared to copper mine somewhere else, which is extremely dirty. So they're going to want a premium on that. So then they integrate it into the Abaxx exchange. And Robert Friedman is also a shareholder of Abaxx, and he's also a friend of the one of MineHub's biggest customers, Codelco. So there's definitely a connection there. But if that mine wants to sell the copper at a premium, they'll connect into the Abaxx exchange using MineHub to track it, and then they can get that premium. So you start to see that if Abaxx is successful in like the graded commodities, then every company trying to sell it will also be using MineHub to do it.
Okay, so in Abaxx marketplace, you basically buy and sell the contracts with physical delivery, but then you have to do all the operational stuff. You have to take the commodity from a place to another, and then you use MineHub integration for that. Did I understand that correctly?
Yeah, that's exactly what it is. Yeah. So you see that every customer that wants to use Abaxx sell their graded commodities, then they have to use MineHub as well. I'm guessing, like I don't know the details, but it's just one would imagine that, yeah, if you want to do graded commodities in the partnership that Abaxx has with MineHub, they're going to be pushing MineHub to say, hey, we have this integration with MineHub. That's how we sell our graded commodities. So you should be implementing MineHub as well to do that.
And do you have any idea of what this can represent for MineHub in terms of revenue? And also, how is Abaxx progressing? I mean, are they getting a lot of new customers? Revenue is growing a lot because I've not been following Abaxx so closely.
Yeah, sure. So for MineHub, that would obviously be a huge amount of revenue. For example, I think they have 8 customers right now, 8 paying customers. Or in the financials they reference 4 make up like 80% of the revenue, and the revenue is right now 2 million. So I mean, on the downside, they have 4 customers. So if one customer leaves, then you're going to get a major hit in revenue. Although they've said they've had 100% renewal rate consistently. On the other side, they only have 4 customers and they're already generating $2 million. Imagine what that happens when they start to integrate much more of the ecosystem. I think they have 100 in their investor report. They have 198 plus companies right now using their platform. Now that includes a lot of free tier members, but obviously as their platform grows, more of those free tier members will become paying customers. And then it goes back to, okay, so they have 4 customers generating almost $2 million in revenue. What happens when you start to add more? I don't think the smelter was I'm sure you saw that they signed a massive smelter. I don't think that was signed on yet. I don't think they added that in the revenue numbers yet, just because the AR was consistent between Q3 and Q4. So it doesn't look like it was added on yet, but once they add that on, how much is that? Like maybe that's another $1 million in revenue, $1 million in revenue just from signing that one company. Mm-hmm. Right. And then you also they've been talking about entrances into India, which is also massive. And every time they add a new massive company, that just keeps expanding. So in that regard, yeah, you can clearly see that once they start to get traction and continue to accelerate their adoption, it's going to grow crazy fast. And then what was your question for Abaxx? I forgot it.
What can this partnership with Abaxx represent in terms of revenue? Do you have any idea? And do you have any idea of how MineHub charges for companies that come through Abaxx?
So I don't know any of that with what does MineHub charge? I know what MineHub charges because that's in their investor report. I think that's 0.015%. I think that's, if you look at how much commodities flow through the platform, I think that aligns with the revenue numbers kind of a little bit. So I would expect that would be the similar. For Abaxx, in terms of their revenue, I mean, they would get, if they own 20% of MineHub, I guess you would say that they get 20% of the revenues of MineHub. Mm-hmm. With how much Abaxx has been integrating a lot of companies, I think on Twitter, their CEO, Josh, was mentioning they have 15 market makers now onboarding for the gold contract. And then you have, I think the LNG contract was made with help from like 100 companies in the LNG sector. And I think I think they mentioned in their investor reports that a major auto manufacturer was also interested in their contracts. I think it was nickel. I think it was the nickel contract that they had some interest there. So there's definitely like a significant amount of interest because nickel's physically delivered commodities you need it in this world, right? It's financially settled contracts don't really get there. And so, yeah, so I think there's huge growth there. It just takes some time, right?
Okay, and you just mentioned MineHub entering in the Indian market. I know that MineHub is also entering in the Chinese market. Can you comment on what the Indian and Chinese market can represent for MineHub?
Yeah, I think for that, I think it goes a long way in towards building trust. MineHub is a Canadian company, and the fact that they're integrating companies like in Asia just kind of shows their trust that they're building as like as a what's I guess independent company, kind of neutral company. Their focus is on combining all of the markets together, which is obviously great. They have Sumitomo in Japan. I think they have Codel Southwire is an American-based company. Codelco, I think that's
From Chile.
Chile. Yeah, I was gonna say South American. Yeah, that's a South American company. Now they have a Chinese smelter, so now you're starting to get South America, North America, Japan. You're starting to work into Asia. Then you also have Robert Freeland, for example, and his copper mine that's based in Africa, the Kumula copper mine. So really, you're starting to combine all these countries, these areas in the commodity sector. And obviously, India probably produces, I haven't looked at the numbers, but I'm guessing they produce a crazy amount of commodities, and then they're exported across the world. So that's obviously huge. And then for a Chinese company to trust MineHub, which is a Western company, is also significant, I would say. I think, yeah, so obviously they're building the trust needed to build this commodity supply chain tracking. So that's obviously very important.
You just mentioned Sumitomo partnership with MineHub. Can you comment on how big Sumitomo is and what this partnership represents for MineHub?
Yeah, Sumitomo, that's a Japanese company. Let me do a quick Google on their size. I think they're like a $50 billion company.
Yeah.
It's 4.32 trillion Japan yen, but what is that in market cap? Just give an idea. $83 billion. So yeah, they're about an $83 billion company. So they clearly do a lot of commodity trading. They've been a very close partner, it seems. With MineHub, I mean, they recently expanded into non-ferrous metals. So it definitely seems like Sumitomo is pushing to use MineHub in all of all their sectors, which is probably also driving a lot of growth, right? Japan probably does a lot of trading with China. So I wonder if the Chinese smelter was also as a result of their partnership with Sumitomo. Like Sumitomo was pushing, like, we're using MineHub. It's a really great product. You should also integrate it. So I wouldn't be surprised if there was something there. I think that just shows that Sumitomo is also pushing other companies to use MineHub, it's great because it's not like MineHub saying our product is really great, you should use it. It's also Sumitomo saying their product is really great, we use it for everything. We've seen significant improvements, you should also use it. So there's definitely been a lot of support there in that regard.
Okay, another subject. I saw you talking about the launch of MineHub's financial document module. What is that module and how important is it? And is it connected to their partnership with SureComp?
Yeah, so that is, I never used it, so I can't say for certain. I can only base on the description of what they were talking about, but it makes sense. Basically, they're trying to get away from emails more. And the idea is that you can integrate your financial information into your platform. So then when you actually have to pay the company or create bills of all this sort of stuff, you can just issue it through MineHub. And then you automatically have everything there. You can say, okay, this trade was made. It owes this much money. You can go in there and see this banking information for the company, which is much better than the alternative, which would be, hey, you have to call up someone, get their email, or get their banking information via email. Then you have to manually wire the money. Well, you still have to send the money, but it reduces some of the friction compared to like constantly emailing and doing all that stuff, which also increases risk, right? That can be leaked. Anything can happen there. It increases the chance of fraud. So the idea is to get away from using emails more and try and more integrate that into their platform of staying in the platform. With regards to SureComp, I'm not too familiar with that. I know SureComp is offering trade financing. So I'm guessing that using that information, they can connect into SureComp, and then you can manage the financial aspects of like the actual banking APIs and stuff like that from SureComp, maybe like the wiring of the money. So you create a trade on MineHub, Then you upload your financial information, and then you can see it maybe in SureComp. I'm not too sure with that one. But yeah, so there's definitely some nice integrations there that's happening, which will reduce the frictions in that regard.
Okay, so with this financial module, you can do a lot of the paperwork, the financial paperwork in MineHub's platform itself, right?
Yeah. Then you can attach then you can track the payment status of that commodity that you just purchased. You can do that all within MineHub, as I understand, instead of constantly asking through emails, hey, I need this payment. You can, or did I receive that payment? Right? You'd have maybe right now you'd have to log into your bank. You have to check your banking. It's like, okay, we got this payment. Then we have to manually go back into our platform, and then we have to update that the payment was made. Or you'd have to contact someone from your financial departments, ask, was the payment for this made, right? So it's kind of streamlining everything by just making it more pushed into their platform, and then you can kind of see it easier and reduce friction there.
Great. Talking now about competitors, have you found any competitors of MineHub? In my conversation with Nick Hodge, he mentioned a company called Circular, which developed a battery passport with Volvo. Do you know that company? Are there other competitors? And if there are other competitors, how do they compare to MineHub? Can you comment about that?
Yeah. For Circular, they're also doing something similar in regards to battery tracking, because you're going to have battery passports being introduced into the EU, which is going to require you to track everything inside the battery. So there's that. There was another one called TradeLens, although that one failed. It started in 2018. They were working on it until 2022, and then it failed. As they were backed by Maersk and IBM. My understanding was, based on what I was reading, is that many companies weren't eager to give their supply chain tracking into a possible competitor. See, Maersk would be a competitor. And so I think that also kind of highlights the importance of MineHub, because MineHub isn't actually doing that. They're just providing the platform, which kind of builds more trust, because when they're using the MineHub platform, they're not thinking, oh, is my competitor going to see this information? They can choose to share what information they want. So I think in that regard, and then I think there was a couple more blockchain-based ones. I think VeChain was the first investment I ever made in kind of this space was VeChain, which was a blockchain-based one. Mm-hmm. That was back in 2018 during the crypto hype, the first crypto hype, I guess I should say. Although they haven't done much lately. It seems like they've been transitioning away from that. The main focus was first supply chain commodity tracking, where you could scan a QR code and you could see exactly where everything it was. Although that was more down to the surface level things, such as if you walk into your local store, you can scan a product and see exactly where it came from. That wasn't really focused on commodities. And like I mentioned, I think they started transitioning away from that aspect. I don't think they got a lot of traction. And then you're going to have some big companies like, I think E2Open was another one. I was looking more into E2Open. I think they're more of a ERP or FRP. It's more siloed though, which is you can sign up, anyone can sign up, but it doesn't require any of your, what's another word, counterparties, which is basically all the people you trade with to sign up. Whereas MineHub, if for Sumitomo, when Sumitomo signed up, they were also having to onboard all of their partners to give them free accounts. Mm-hmm. I don't think that's with the other competitors that work on it. They're more siloed. And I think what Chainlink is working on is integrating those so that, they can kind of share information. So if you're using one of these, then you can directly connect to MineHub and then use the information from MineHub, as I understand. So, and then, I don't think there's as many, but those are more generalized, right? They don't really focus on commodities. They stay at a very high level, which you can customize to fit your need. But for MineHub, they're really focused on the commodity side of things. So everything that they build is just focused on commodities, as I understand. And there was, Waybridge, which was a competitor, and then Waybridge merged with MineHub. And the MineHub has been saying that there might be some more consolidation in this sector. So I wouldn't be surprised if two of maybe if competitive MineHub would merge. I'm not sure. I'm not sure at that, but it seems like they're interested in that. Maybe buying some smaller companies in these niches, and then that would complement MineHub possibly.
How unique do you think MineHub is actually? How advanced do you think MineHub is in relation to these names, to these companies that you mentioned?
For that, MineHub is trying to focus on something that has been tried before, but it has failed. Like I mentioned with like VeChain and TradeLens, those VeChain, I wouldn't say it failed, but they obviously changed focus. TradeLens, yeah, that failed. They ended it. With MineHub, they are making much more progress, I think, compared to that. They're making really significant inroads into these markets with Sumitomo, with the Chinese smelter, making entrance into India. With these these are massive companies that they're working with, like billion-dollar companies. And then of course with Abaxx, they also have a very good chance there. So I think they have a great position. And then the way they're addressing the market is also very accelerative in the sense that once they have Sumitomo, then they also have all of Sumitomo's partners. Mm-hmm. So then they start approaching the partners, and then once they get another partner of Sumitomo partners, then it just expands quickly, and then they start to quickly capture the market. And then the faster they grow, then the more faster it even grows, because now they're saying, hey, pay for a product because you're already using the free version and all of your partners are also using it. So clearly it's very beneficial to you. It will give you all these improvements. So I think that's a unique way to approach the market, by getting other companies to promote the product for you. I think that's a little more unique in regards to other companies, where other companies, it's like, yeah, you can use the product yourself, but yeah, we're not really focused on what your partners do.
Huge network effect MineHub has, right?
Yeah, definitely. Yeah, they've been definitely accelerating the growth, I believe.
That's a key point I really like about them. And what are the biggest risk that you see with MineHub? Can you comment on that?
Biggest risk would be, more dilution as they have to pay. I'm hopeful that they can reach break even soon. So you definitely have the dilution risk. You have the more and more competitors with maybe better financialization can enter the market. So hopefully that they can grow quicker and fast to offset that risk. Given that the chance that they're so integrated into platforms like Sumitomo and other platforms, I don't see the risk that that they could possibly go bankrupt or delist. I think what would happen before that would be just dilution to pay for all the bills. So hopefully that they can start to break even soon, and then that minimizes that risk, and they just keep accelerating.
Yeah, that's actually my biggest concern about them, because they've been burning cash quarter after quarter, and at least in my opinion, they don't seem to have a strong balance sheet. So it seems that they don't have much time until they reach break even. And if they don't reach break even, I don't know, until the end of this year, or maybe in a little more some time. My biggest concern is about massive dilution. My biggest concern is that they would need to raise more capital.
Yeah, definitely. I mean, looking at their financial statements, you have, I think they had about $1.9 million in Abaxx stock, possibly, in terms of as of January 31st, 2025. So they had that. Then they had some like $300,000 in cash. I did notice that they were able to get a lot of warrants exercised. So I think that injected about $400,000, I think, just tracking like the shares outstanding. I'm assuming the warrants. I'm just comparing the shares outstanding versus how many warrants they have at this price points, right? When it goes up to 60 cents, you're going to see the 40-cent warrants being exercised. So just tracking the share issuance, you're going to see. I think that came about to be $400,000 in that regard. They did take a loan out in June or May I think, and that was, for me, that read like a bridge loan. It seemed like they're close to getting something, right? Because they signed the Chinese smelter partnership, and they haven't seen that revenue yet reflected as of the Q4. So my gut feeling is that they're really close to signing, getting like that revenue onboarded, and then they use the bridge loan kind of push them over the edge. I do think that the tariffs were in a way beneficial, but also negative. Tariffs helped show the importance of tracking your commodities. I mean, for example, I know a small company that was trying to import steel to America, and then the border thought they were trying to import aluminum, so they had to go up the supply chain, prove they're trying to prove that what they're importing is actually steel, so it has this tariff rate instead of this tariff rate. They had to show where the steel came from. So that highlights the necessity and need for like things like MineHUB commodity tracking. At the same time, though, you're not really eager. These massive companies aren't really eager to onboard a new product in light of all these tariffs where everyone's panicking. We're trying to reroute all the products, trying to figure out pricing. When you have all that panic, they're not really focused on onboarding a new product and training all their employees on using that product. So it's beneficial, but it was also a little negative. So as it seems like it's starting to cool down a little bit. So I hope you'll start to see more companies onboarding onto MineHUB as that complexity settles. And then afterwards, they can look back on that complexity and say, we really should have had this digitized. We shouldn't have had to do all that stuff. And then they go forward with more MineHUB.
And speaking about potential, where do you think MineHUB can go, both in terms of business and market cap? Do you have a price target? Do you see MineHUB becoming the business, the sector standard software?
Yeah, in terms of potential, I mean, yeah, if they can succeed in what they're trying to accomplish, the sky is the limit with what they're working on, right? I'm just trying to think right now.
Would you say that it would be crazy to expect MineHUB to reach like 20 million in revenue, 50 million in revenue, 100 million in revenue?
Oh, I would expect that. Yeah, definitely. Yeah, I think that's a given. If they're able to accomplish what they're trying to accomplish, right? Then they just like I said, they have 4 companies providing like almost $2 million in revenue. The commodity market is absolutely insane, right? I think their total addressable value is in like the $1.5 billion or something on just commodity supply chain tracking. And that's not even getting started into what they can do with the financing aspect, right? When you start to provide all these banks with all these financing information, all this supply chain information, then you can start to get a small piece of the finance revenue. Like I think in they reference 0.1% on their total on the financed amount. So you can also enter that avenue, which is also significant. And then also like when you have the commodity supply chain all from the very beginning, like you have it tracking with MineHUB from it came out of the ground in, let's say, Africa. The copper came out of the ground from Africa. Then it was shipped to a refiner in, let's say, China. Then it was refined in China, all still on the MineHUB system. And then it was sent to maybe Sumitomo, which is a trader. Sumitomo buys it from the Chinese smelter maybe. Then they maybe add the carbon offsets, right? And then they're going to send it to, let's say, an EV manufacturer based in the United States or EV manufacturer based in Europe, right? You need a lot of copper if there's a huge push towards EVs right now, I mean, you're going to have to electrify the grid significantly more, which is going to require a significant amount of copper. You have, I think in the United States, I think it was in California, they're also introducing some new requirements. And that would also require you to prove your sourcing of all your materials for certain objects or certain imports. This is all getting like, the more as time goes on, going into 2026, 2027, be forced to either digitize it or manually do all that stuff.
Mm-hmm.
And I don't think anyone wants to do that all manually.
Yeah.
So like, yeah, I think it's definitely possible that you start to see 100 million, 200 million, $300 million in revenue. And then as they're growing extremely quickly through like the network effect, then you start to apply like 20x multiple on it. And then, yeah, it's like you have easily a $1 billion, $2 billion company, right?
Mm-hmm.
So there's still more like revenue streams they can unlock. And then when you have the commodities sector, like when you have it all using your platform, then you can start to enter the lower level platforms, like tracing your phone. Your phone obviously uses some copper in it. Where does that copper come from? Then you can start to get into even more of those nitty-gritty details and more into, which is even bigger market than just the commodities market.
Yeah, I totally agree with you. Now, reading forums and comments, I saw that many people think that this company is expensive because it is trading at more than 10 times revenue while it's still posting losses. What's your take on this company's current valuation? In your view, how should people think about that? I mean, should they be valuing this company based on price to sales multiple?
For me, in my mind, I've always done roughly like for a high growth company, usually just like a 20x of the revenue that they bring in. So, I mean, if it's 2 million revenue, then you would expect somewhere in the 40 million range.
Mm-hmm.
So I guess sometimes it can get a little expensive in that regard, but you also have to consider that the speed at which they can quickly onboard new clients would only accelerate. So yeah, this year they might have 2 million. Next year, what if they have $15 million in revenue? And the stock is extremely illiquid. You saw that Sprott was also adding, I think in January, they added like 750,000 shares, and that brought the price. I mean, there was probably more people buying, but that nearly doubled the stock price. So there's some serious illiquidity. I don't think you can necessarily apply some standard metrics to companies that are in these price ranges. Like companies in the $40 million price range, you can't use the same metrics as a company in the like $20 billion price range. It's at that $20 million, $40 million, it's more of a story that you're also buying into as well. I mean, when Uber was launching, I don't think you can say, like when they're losing money year over year over year for like the first 5 years of operation, maybe they're even still losing money, but I don't think you can say, oh, they're losing money, it's a worthless company, right? And so, yeah, people can apply different metrics to it, but at the end of the day, you have to look at the growth potential, and then just position accordingly to what you're comfortable with.
The way I see it is, okay, some people are valuing this company based on price to sales, but I think that in a company in this stage, an early stage company, I mean, you should also consider how much was spent on developing the platform. And according to my conversations with them, they spent about 40 million. Now, I don't know if that's Canadian or American dollars, right? But they've spent 40 million on developing this platform. Now, there were repeated investments because Weybridge and MineHUB were investing toward the same goal. But as they told me, it would cost about 25 million to build a similar platform. So I think that you also should consider that. And I think that you also should consider the value of the clients, of the names that they are onboarding. I mean, what's the value of having Sumitomo and Codelco and Southwire as clients, right? So that's the way I see MineHub's valuation.
Yeah, definitely. I mean, also when you onboard these massive companies and they start to commit more and more into MineHub, they're not going to just leave at a second's notice. They'll be committing multi-year long, maybe even up to a decade to this process, assuming like the platform doesn't like collapse or anything on itself, which, yeah, that won't happen. But these are major long commitments that they're taking. They're saying to all their partners, hey, we're using the MineHub platform and we will continue to use it for the next several years, maybe for the next decade at least, maybe forever, right? They're not going to just suddenly, oh, there's a new platform out there, we're just going to switch over just for, maybe the price is a little lower. There's a lot that goes into it, right? a competitor might come up and say, hey, our price is half the price. But it's like, okay, sure, it's half the price, but now I have to do now I have to take everything from the one platform, move it to the other platform. Now I'm losing some of the network effects that I've been using, that I had before. Now I'm putting in more risk in my operations. It's been working good so far. So you have all those other risks as well. And, that creates a sticky effect that a very important sticky effect. You're going quickly, but also the clients that you're adding on want to stay as clients for long term.
Yeah, I saw that many people were afraid of competition, and many people were not valuing MineHub's first move advantage. But the way I see it is that, okay, you might have new competitors arriving at this market, but it's not only about pricing, because to quit MineHub's platform, I mean, what about all your partners that are already on the platform? I mean, that has a cost.
Yeah, definitely. Yeah.
I heard a rumor that Sprott has been buying MineHub shares. Do you know if that's true?
Well, it's not a rumor. It's officially reported in Cedar. So they had to report on the March 12th, I think it is, that they bought more stock. We can quickly search if there's more. I think it's on the 12th or 13th they have to report if they've purchased more stock. But yeah, they definitely been buying more stock, and that's probably was part of the push in January, February. And also, yeah, like it said, it shows the liquidity. So yeah, it might be too expensive for you now, but once MineHub makes a news release that they just doubled the revenue, well, good luck trying to accumulate shares whenever suddenly everyone is trying to buy it, right? Then you're gonna have retail who might be just market ordering, pushing the price away from you. Maybe that causes a little panic. So it takes you, if you want a sizable position, you have to take your time. And yeah, sometimes it might be a little expensive, but if you look at a long-term point of view, it might not be too bad.
Yeah. First comment. I saw some people saying like, "Oh, I'm not going to pay for a company that's not growing a lot. I prefer to wait. I prefer to see the growth. I prefer to see the profitability." And what I think is, well, man, good luck on that, because once they start showing growth, I mean, I will be happy to provide you as many shares as I can, because the price will probably go to much higher levels. I mean, and also, what does Sprott buying MineHub shares mean to you?
Yeah, I mean, going to your first point was, yeah, it's once you start to compete, like the liquidity at these levels is crazy. It can easily, I remember some days I was buying the entire day's volume. Like for a small time investor, it felt good. It's like, yeah, I bought all the shares that were sold today and bought. I was the only buyer, which is, yeah, once you start adding more once MineHub starts to show significant growth, you're not going to get the current price that was priced. No, that's a bad way to say it. You're not going to get when they prove the growth. You're not going to get the same price today as when they actually prove the growth. That's the risk you take in these markets, right? In regards to Sprott buying, I can only assume that it might be for their ETFs, maybe, and they're putting their ETFs, which kind of suggests increased confidence of it, right? Also, I've seen rumors that Sprott is known to be very I forget the word, but basically, like if Sprott wants to enter your position, they'll usually do a financing with very nice warrant position, which it seems like they did with MineHub last time, which kind of gave me a little confidence that if they're not trying to do another financing with MineHub might have some strength that that it's not quite yet public yet, maybe, because like why would they be buying on the open market if they're used to financing and getting almost free warrants for it? Which I do believe that if you look at the report on Cedar, they do have warrants which align with the last financing before Abaxx.
Okay, and one last question. What are you doing right now with your shares? Are you accumulating more? Are you buying more? At what price are you planning to sell if the stock skyrockets now?
What I'm doing now, I've I have been accumulating for a while, a little too recklessly, in the sense that I used up my emergency funds for that moment. So right now I'm just right now.
I totally get. I totally understand you. Totally understand.
Yeah, so right now I've just been focusing on saving that emergency fund again. But once it's in a good healthy position, then I'll start to accumulate again, I believe. I mean, unless the stock price goes like if the stock price doubles, I'll probably just stay where I am. I mean, I have a very strong position. I'm not eager to like keep chasing it. Once I have a strong position and then it's just suddenly skyrockets, I won't probably sell it for a while, but I also won't be buying. I'll just be holding my position strong. My price target, I don't really have a price target in mind. I mean, I would love to see at least be like $1 billion before I start to sell like some, profits. And if I were to sell, then it may be like 10% or something. But yeah, I usually like to wait for like at least like a 10x or something before I start to take profits. I'm more in the long-term holding. I don't really like to, it stresses me too much. Like, oh, it's double now, I'm going to start taking profits. Like, if I'm right, then it's going to go 10x, 100x. So I'm not too much in a rush.
Yeah, great. Is there something more that you would like to add here that you think is important?
No, I think we covered most of it.
Okay, so it was a pleasure to meet you.
My pleasure.
Okay, bye bye.
Take care.
Take care.